Hey everyone! Welcome back to today's XRP market analysis for May 11th, 2026. You know what I've noticed? The market's been giving us some really interesting signals lately. So let's dive right in and see what's happening with our beloved XRP, shall we? Oh, before we start, just a quick heads up that this video is based on an AI-generated report. I'm not a financial expert or anything, just someone who loves looking at market data. So please use this as reference only. And remember, investing is always your own responsibility. Okay? So let's start with where we're at right now. XRP is currently trading at $1.4745 and, well, it's having a pretty good day. We're seeing a nice plus 3.87% gain over the past 24 hours. The 24-hour high touched $1.5082, and the low was $1.4119, with a pretty solid trading volume of 156.98 million XRP on Binance. Here's the thing, XRP has actually broken through that stubborn $1.45 resistance level, which is creating some nice short-term upward momentum. Now let's talk technical indicators, because this is where it gets interesting. The RSI is sitting at 53.83, which is right in that neutral zone. Not overbought, not oversold, just balanced. The MACD is telling a more optimistic story though. It's at 0.0046, sitting above its signal line at 0.0037, and the histogram shows 0.0009 positive, suggesting we've got some upward momentum building. Wait, here's something noteworthy. We're actually trading above the upper Bollinger band at 1.4512. That usually indicates strong upward movement, but it can also mean we might be due for a little breather soon. On the global front, things are a bit tense right now. The US-Iran nuclear negotiations have hit another wall. President Trump called Iran's latest proposal inappropriate, and Iran is pushing back, asking for sanctions relief and war reparations. You know what I've noticed about geopolitical tensions? They tend to make crypto markets jumpy. The good news is XRP has a minus 0.2469 negative correlation with the dollar and minus 0.2365 with the VIX, which means it often does better when the dollar weakens and volatility drops. On the regulatory side, well, it's been pretty quiet actually. No major XRP-related regulatory news, which, honestly, no news is sometimes good news in crypto, right? But here's what's exciting. The XRP ETFs are seeing some serious action. XRP had 2.48 million in trading volume, with $10.3 million in net inflows, and the XRP ETF showed 621K volume with $9.9 million net inflow. That's institutional money flowing in, and that's always a good sign. The market sentiment is sitting right in the middle at 47 on the Fear and Greed Index, completely neutral. XRP search trends are pretty low at 25, and honestly, sometimes that's when the best opportunities show up. The FOMO spread is just 1.0, so we're not seeing any crazy speculative fever right now. The XRP to Bitcoin interest ratio is holding steady at 0.9825, which suggests XRP might have some independent upward momentum brewing. Now this is interesting. The on-chain data is showing some whale activity. We had 11,904 total transactions, with a massive 1.16 trillion XRP in volume. Here's the kicker. Whale transactions made up 1/328 of those trades for that same 1.16 trillion XRP. That means the big players are actively adjusting their positions, and they're likely driving these current price increases we're seeing. From an Elliott Wave perspective, we're currently in the C corrective phase. The Wyckoff analysis is showing us in phase A of the accumulation stage with 46% confidence. You know what accumulation usually means? It's when the smart money quietly builds positions at lower prices before the next big move up. We're seeing that volatility compression and volume increase that typically happens before things get exciting. Okay, here's where the AI predictions get really fascinating. The short-term one-day prediction is calling for $1.2915. That's a minus 12.4% decline with an 83.9% probability. But wait, don't panic. The medium-term 7-day prediction flips completely to $1.7188, which is a plus 16.6% increase with a 91.4% upward probability. And the long-term 30-day forecast? $1.7391, showing a plus 17.9% gain. So the AI is basically saying, short-term dip, then strong recovery. Now let's talk about the risks, because we always need to be realistic. The geopolitical tensions could create some market jitters. That short-term correction the AI is predicting has a pretty high probability. We're trading above the upper Bollinger Band, which can mean we're a bit overheated. Plus, we're still about minus 19.46% below that 200-day moving average, so the long-term trend is still working on recovery. And with whale trades dominating the volume, if the big players decide to sell, things could get bumpy fast. So here's my overall take, and remember, this is just based on the data I'm seeing, not financial advice. The recommendation is wait and buy gradually. Here's the thing. While we might see some short-term correction pressure, the medium to long-term signals look really promising. My suggested strategy would be first buy level around $1.29, second buy level at $1.20, with a stop loss at $1.10. The targets? First target at $1.72, and if things really get going, maybe $2. The key here is patience and not going all in at once. And that's it for today's analysis. The AI is showing us a pretty clear pattern. Short-term caution, but medium-term optimism. If this was helpful, please give it a thumbs up and subscribe for more market updates. Remember, always do your own research and never invest more than you can afford to lose. See you in the next one.